All right, folks, welcome back to another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial markets. And today's session was not the best session, but guess what? I took one loss, my risk is managed, and we're still good. The thing is, though, if you look at my statistics, you can see right here that my win rate is just slowly dwindling. My profit is slowly dwindling away. So I'm kind of in a position right now where I'm more of a break-even trader. If you look at my daily net cumulative P&L, it's just up, down, up, down, up, down, up, down, right? I'm really lacking that consistency. And what I've noticed is probably the biggest factor that is hurting my consistency when I trade is my approach to price. And my approach to price was exactly the reason why I did not have a good session today. So if I go to my monthly review for June, right, you can see the stats here. Pretty decent. My win rate, extremely low. That's a red flag. But what I notice and what's holding me back the most is literally my market approach. So in my little summary, I say, what is holding me back the most? My market approach. I'd go into 9:30 not knowing what I'm looking for / not in submission to draw on liquidity. This allows my sentiment to get easily manipulated because I'm looking for reasons for both sides of price to play out, and I miss the majority of moves that I plan for. This also influences that idea that the market has gone too far at 9:30 because I don't realize that there's range between where price is and the draw. So bias / strong liquidity / pre-market approach is my biggest killer, and that is the reason for today's loss. Now going into today, this is literally what I'm thinking. Check this out. I think I'm probably making the same mistake as yesterday, judging what the higher time frame should do based on the lower time frame. I think I know this daily candle is probably going to be a large up candle, but don't want that to happen because of what's setting up on the lower time frame. At the same time, it makes sense to see this weekly range close inside the range because we're going into a holiday weekend. So I know this isn't necessarily true. I'm just saying this to subconsciously back up my idea of wanting to be a seller going into the open. So I'm looking at the daily chart. Let's go to the daily chart. Well, first let's pull this up, all right? Daily chart right here, based on Wednesday's range, today's range is likely to be a large up candle that decisively closes over Monday high, okay? So let's go ahead and just do the session review, starting from the daily time frame. Or actually, take a step back. Let's start from the weekly time frame. So on the weekly time frame, if I go all the way back to Monday, I did this in yesterday's video, but I guess I might as well do it today. If I go all the way to Monday, and I look what I was thinking at Monday, the start of this week, I say, with this close on the previous weekly candle this week, I would not anticipate price to do something similar, or I would anticipate price to do similar or base out and not do much staying inside a consolidation. We could see that consolidation throughout the week because we have NFP on Thursday and a holiday on Friday. So based on the economic calendar, what last week's candle did, I want to see price behave more of in a consolidation. So I'm expecting like a small range candle on this week because of what last week's candle did, large weekly range, and the economic calendar, we had NFP this week and a holiday weekend, right? With that in mind, drop down to the daily. Let's look at what the daily time frame does, okay? Down candle on Tuesday, market trades down. Tuesday does not take Monday's highs. We have relative equal highs here on the daily time frame. Market drops into this gap, it closed above it. That's a sign of strength. Wednesday drops lower, takes Tuesday daily low, closes near its high. That's very bullish. When we have down candles and the market is bullish on the daily time frame, those down candles set up the next move higher. So I'm looking how this range settled near its high and basically overlapped the entire down candle, which is Tuesday's range. Doing this reaction out of the gap, that's a sign of strength. So looking at the daily time frame, going into 9:30 today, I'm thinking this market is probably going to have a large up day that closes decisively over Monday's high. Now, why don't I submit to this idea? It's because of what I see on the lower time frame. If we drop to the hourly, this is basically my market understanding, what I use to frame trade ideas. You see how the 9 or the 8 o'clock candle trades up into Monday's daily high, but it closed below it. This is the market's reaction on NFP, right? The close below is an indication of weakness most of the time, not in this case, not in this market environment, because of what Wednesday's range has done and because the daily chart is extremely bullish. It doesn't make sense to see the market lower. If Wednesday's range takes Tuesday's low, closes, settles near its high, and then we see a consolidation overnight, the market's likely to go from expansion to consolidation to expansion because we're bullish on the daily time frame. But I look at this on the lower time frame and I think, okay, this is kind of bearish. This is a sign of weakness. I want to see the market drive above this high and fail and look to be a seller. Not only that, but we have what? A premium gap opening, right? So a gap up from where we closed yesterday in regular trading hours, large premium gap opening, and we have smooth sell side liquidity left behind on NFP. So usually on high impact drivers, the market will trade one direction, and whatever is left behind, if the market leaves behind smooth levels in price, that's liquidity left behind. And usually the market defers to the other side of the marketplace, attacks areas like this after we have a highly manipulated event. Now that didn't happen today because of the market environment. So if I look at the playbooks I've been establishing recently, today I was looking for a bearish premium gap opening where basically, if I look at the rules, the time that the setup occurs is between 9:30 and 10 o'clock. Basically, I'm looking for a premium gap fill. I'm looking for, in the pre-market session, for the market to offer buy-side delivery, meaning I want to see it trade up in the pre-market session. I want to see the market leave pre-market sell-side liquidity that is very smooth and very obvious below. And then I want to see a 9:30 Judas swing, meaning I want to see the market trade higher at 9:30. The market checked all these boxes today. So for me to look for my bearish premium gap opening setup, where basically I'm just looking for the market to open, trade higher at 9:30, and then reverse and do a gap fill and take out the sell side liquidity below these lows, because of what we've done so far in today's session, especially on the news driver, and this close below Monday's daily high, I'm looking for sells going into 9:30. Now that didn't happen today, even though every piece of market criteria that I look for to take this kind of setup was there, it didn't play out. Why? Because of the daily chart, because of how the weekly range is developing, and because of the current market environment. We're at all-time highs. Is it a good idea to be a seller at all-time highs? It's not a good idea. You get your ass ran over every fucking time. Basically, damn near. So that's kind of been my issue recently. I've just been looking to be a seller in these conditions at all-time highs. So the big lesson from today is, hopefully I can share this, pass on this lesson down to y'all, is it doesn't matter if all the market criteria is there for your setup because of a factor called setup selection, right? All the market criteria can be there for that setup, but that doesn't mean that's going to happen. So you can't go into the market blindly looking to be a seller just because your market criteria is there for your sell setup. It has to be the right market environment as well. So all my criteria was there to be a seller today, but it wasn't the right market environment, which is exactly why it didn't play out. Now, because it checked all the boxes for my market criteria to look to be a seller going into 9:30, I approached 9:30 extremely confident.
FBI open up. You're playing Roblox with us.
Huh?
FBI open up.
I'm making a YouTube video right now.
Wait, what? Oh, okay.
All right, I'm not sure where I left off, but basically what I was getting at was the market checked all the boxes for me to look to be a seller going into 9:30, but that didn't happen. Why? Because the market environment was not correct. So it can check all the boxes for the criteria, but if it's not the right market environment, it's not going to play out. So I was so confident going into 9:30 because everything was there. But because I was so confident, I forced a sell that was never really even there, and that's why I took the loss today. So here it is, right? So here's this 5-minute buy side and melt sell side efficiency. Number one, on the 4-hour, go back to my pre-market plan. Let's go to notebook. Daily today. Okay, I'm documenting everything. I know exactly where I went wrong today, and that's power. So, not here, not here, not here, not here. Not there, not there, right here. Boom. I'm leaning towards seeing price close back inside the range on a run above Monday's high because of the liquidity left behind on NFP going into today's holiday weekend. But I say if price decisively leaves Monday's high, then I would not carry this idea late into the morning session and do nothing but stick around trying to fade it. So I know that if the market decisively closes over Monday's daily high, this trade idea is dead. But what does the market do? In the first 5-minute candle, it closes decisively over Monday daily high. So that tells me right there the idea is canceled. But I'm still, and I know that if I go back to, see, everything is documented. I can go back, refer to everything. The criteria is there, but market seems so strong at the open and we're at all-time highs. I'm still being patient and waiting to see if first peak can become inversed. A close below Monday daily high by 9:44 would be ideal. Just being patient, waiting, because at the moment it seems my bias is incorrect, right? And I'm thinking to take the big ass gap, but what would I target? I have no idea. So basically, the market does this right at the open. Boom. Just up, literally just up. And I'm thinking, okay, at this, yeah, my bias is probably going to be wrong. I should probably take this gap as a buy. But what would I target? The market's at all-time highs. I don't have a draw on liquidity. It's just going to go higher. So I don't take it. So because I don't take it, I'm still clinging on to that bearish bias, still holding on to that idea. And I end up selling short before that gap is even inverse. So the trade is just 100% premature. It was never actually there. You can see my execution on this up candle right here. So I sold short on this gap right here with the stop loss above this gap right here. So executed this gap right here, stop loss above that candle's high, and it came back on me so fast and stopped out. Because all this was doing right here was just going back to the 930 open price to touch that before continuing higher, which is what the market typically does on strong trending days. It'll come back, touch the 930 open price, and then continue. Another issue with this trade is that the smooth high is left behind on that drop lower. Now I'm noting these smooth highs, and I'm thinking to myself, like, I'm not really comfortable selling the market short with these up here. I'd rather see the market trade up, take them out first, and then go lower. But the market started dropping with speed. Large down candles coming in, large down candles coming in. And that made me really eager to sell short on this idea. As you can tell, it was a premature entry, right? It was early. I never got the close over this gap right here if I annotate it. And this is the 5-minute gap right here. You see the market barely colors outside the lines? It's not what I'm looking for. If I annotate this right here, market never colored outside the lines, right? Another issue is sometimes I look at these gaps and I think I don't need to annotate them because I just get confident in myself and my ability. I was extremely confident in the sell idea. It was never valid. It was too early. It was never even there, right? So that's the mistake that I made today, but it's a huge lesson learned about setup selection. The market can check all the boxes. It can show me everything. This thing showed me everything that I need to see to look to be a seller going into 930, but that didn't play out. Why? Because the market environment. So market criteria and market environment have to align. It was beautiful. I mean, it was perfect. Like everything that I want to see, I thought the market was just going to go and then take out these lows down here. That's why I got that little eye icon down there. But go to the 5-minute and the order flow is never inversed, right? Boom, this gap's respected. Boom, this gap's respected. And the market just keeps trading higher. So that's basically the mistake from today. Let me go back to the daily price action log, not price action log, but daily notebook, and see if I missed anything else. I think I covered everything pretty well. It was just one simple lesson, right? And then the market just keeps going higher. And at that point, I know like there's nothing for me to do here. It's just going to keep going higher. I'm noticing the strength in today, and I'm like, damn, this thing is a fucking moonshot right now. So let's see. I stopped it on that sell. The idea doesn't look good. The idea still doesn't look bad. I just don't want to lose my ass on NFP going back in there. I don't want to destroy myself today and make it really hard to come back for the rest of the month, trying to look for sells in a market at all-time highs. I was really confident in the idea, and that's why I took it without ever truly being there. I didn't like how there were smooth highs left behind on that drop. I would have preferred to wait and see the 5-minute BIST close over, but how it fast began to drop lower made me really anxious to get on that move. And because I was really anxious to get on that move, I chased it quite a bit, and that opened up the room for a lot more risk than I'm used to. That was a pretty hefty loss in NFP conditions. The trade was just way too early. See, you know exactly what I was thinking after that loss now. There's power in this. I know exactly where I went wrong today, and I know not to make that mistake again in the future because I know exactly where I went wrong. Okay, so for this type of setup that's present, if I see this again in the future, a premium gap opening where it looks good for a sell, I gotta ask myself, is it the right market condition for me to look for sells? Or am I just really eager to take that sell? I should have been looking for buys today. And the buy would have been this gap right here. But even then, what am I gonna aim for? I don't even know, right? So, I mean, this gap is large. I could take the midpoint of it, stop below it right there. 20 handles, I don't even know, dude. I'm sure not a lot of people did well in today's session because it literally just fucking left. It just left. So let me know how you did in today's session and if the lesson that I shared today made sense, because I'm just now getting to the point in my trading development, my trader development, where I'm building playbooks and setups that just repeat over and over and over and over and over again. And that's it. So I have a formula, and all I have to do is show up to 9:30 and take my little formula and press it into the market and do what's there. That's it. So what I'm working on next, it's time to pull up the trader development roadmap. Shoot. Yo, if you guys want this roadmap, let me know. I will share it with you. Just give me your email, which you probably won't want to drop in a YouTube comment section. So maybe hit me up on Instagram or something. But here we are, right? Stage 1, 2, 3, novice, developing, intermediate. I am currently in developing. I've been trading for over 2 years. I'm still a developing trader. You got to humble yourself in this game because this shit takes fucking forever. This shit, I know it's cliche, but it's a marathon. It's not a sprint, right? I'm in stage 2. I'm currently back testing. I'm going to start back testing my playbooks, and I'm just going to follow this process right here. So I've already established criteria for my playbooks, a time window for where I want to look to see them within entry criteria, market criteria, and trade setup environment. So going back to TradeZilla, if I click on one of these and I look at the rules, time, setup criteria, entry criteria, market environment. Entry criteria is what I actually use to get into a trade, which would be notebook, entry criteria right here. Everything's defined. I'm just putting the pieces together, and now I'm putting it in writing, basically. So I think it's going to be this for this one. I think that's going to be it for this one. I said that really fast. Appreciate you for tuning in. Talk to you next time.